There we are, we're live. Good afternoon, everybody. My name is Fiona Woolacombe, and for those of you who have not met me before, I'm the chairman of this company. And it's my great pleasure to welcome you to the annual general meeting of the company. And now it's noon, which is the appointed time for the AGM. We shall let the business commence. First of all, I'd like to introduce you to my fellow directors. Thomas Chambers, who some of you will know already, is our Audit Chair and Senior Independent Director. Today we also have Swarupa Pataki, John Chiplin, and both of whom actually joined our board on the 1st of November 2021, and I do hope you'll join me in welcoming them to their very first AGM of the company. You will also have read, I'm sure, in the annual report that Martin Fines is retiring from the board after the conclusion of this meeting. I've had great pleasure in working alongside Martin since I joined the board in May 2019. And on behalf of the board and all our shareholders, I'm sure, I'd like to thank Martin for his incredible contribution and professionalism over the years whilst he served as a director of the company, and his good humour as well. We will miss his invaluable mix of skills during board meetings and outside of board meetings. And knowing Martin as we do, and as a shareholder, I'm sure he'll be joining future AGMs as an active participant. Also present today is Robert Whitley Smith, who is a partner of Albion Capital and also the company's investment manager. And he shortly will give us a presentation on the results of the company for the year ended 31st of December 2021. The quorum for this AGM is 2 members, and this has been met, and so I declare the meeting formally open. The notice convening the meeting has been in your hands for the statutory period, and so I will take the notice as read unless anybody objects. Due to the success of last year's webcast meeting, and in order to maximise the engagement of all members, the board have actually arranged for Lumi to broadcast this year's AGM, which enables members to have a full participation in the meeting. And we'll talk a bit about that later and be very interested in your views as shareholders as to how it all goes. You will be able to ask questions this time, and you'll be able to vote on the proposed resolutions. And so before we move on to Robert's presentation, the questions and the AGM resolutions themselves, the next part is somewhat procedural. The resolutions will all be voted on by way of a poll, taking into account and consideration the votes already received by proxy and corroborated by the registrar. If you've already completed and submitted a proxy prior to this meeting, you don't actually need to vote again on the poll unless you wish to change your vote. And so with that, I now declare the poll open. The list of resolutions will actually automatically appear on your screen. Please select the option that corresponds with how you wish to vote. Once you've selected your vote, the option will actually change colour and a confirmation message will appear to indicate that your vote has been cast and received. There is no actual submit button. To vote on all resolutions displayed, select the Vote All option at the top of your screen. And importantly, if you want to change your vote, you can reselect your choice. To cancel your vote, select the Cancel button. And you can vote and you can change your vote if required at any time during the poll remaining open and before I announce its formal closure. Importantly, you have 3 options for each resolution. You can either vote for the resolution, you can vote against the resolution, or you may withhold your vote. If there are no questions on the voting procedure, then we'll move forward, but we do have our secretary here and Lumi who are operating the platform if there's any doubts. Thank you. So we'll now move on to the main business of the meeting. Following the manager's presentation, the directors and the manager are very happy to answer questions from members about the presentation or the proposed AGM resolutions as time permits. I'd like to thank some members who've already submitted their questions and queries through the chairman's email address. If you wish to ask questions, please select the messaging icon from within the navigation bar and type your question in at the top of the screen. To submit your question, click the arrow icon to the right of the text box. Depending on the level of questions, there may not be sufficient time to address them all raised during the meeting. However, please be assured that all your relevant questions and corresponding answers will be responded to and posted onto the Albion website later on. I'd now like to hand over to the interesting part of the meeting, which is Robert Whitby-Smith, for his presentation on the fund. Thank you, Robert.
Thank you, Fiona, and welcome everyone. I'm delighted to present the highlights for the year to December 2021 and a brief view of the outlook for 2022. Next slide, please. And the agenda will cover the standard areas that we always cover, the highlights in the year, the new investments made, the exits made, a reminder of our investment strategy, and touching on the importance of ESG in our investment, and then, as I mentioned, comments on the outlook for Q1 and going forward. So next slide, please. We are delighted to announce the 16.3% uplift in shareholder value during the year. It's a fantastic result, and that's driven by the successful growth of our underlying portfolio companies. So in the unquoted tech portfolio, we have the approximately 50 portfolio companies, and they recorded nearly 60% growth in the year to December 2021. And that's really what's driven the uplift in value in the year. The tax-free dividend, as shareholders will know, we have a target of approximately 5% of NAV, which is paid half yearly. And we're delighted that in the year the performance has delivered a 5.5% dividend yield. We go to the next slide, please. 2021, as everyone knows, was a difficult year, and for a number of reasons. We've had a long period of loose monetary policy following the financial crisis in 2008-9, and then we were hit by the pandemic, and the pandemic hit much of 2021 and impacted, portfolio companies' ability to attend events and interact with customers and partners, and a difficult period. Coming off the back of the pandemic, we've now had Russia's horrific invasion of Ukraine, which has led to inflation, particularly oil and gas inflation, which is feeding through to other elements of the economy, which is leading to the central banks moving to tighten monetary policy and higher interest rates. And currently that's the consensus view. If we take the OECD's latest forecast, is for 0% economic growth in the UK next year, and the chances of a recession next year I would say are probable. So difficult, strong headwinds, but against that, we are investing in structural growth and structural trends of increasing provision of healthcare digitally and increasing digitization of the economy as software continues to eat the world. And so we see it is a difficult backdrop, and we have a cautious outlook, but we are confident of the long-term trends, and we're backing companies that are selling mission-critical products. So, for example, cybersecurity services and products fighting financial crime, and those are set to be resilient in the expected downturn next year. We can move to the next slide, please. This slide highlights the track record over 1, 5, and 10 years, and you can see that consistent, strong performance over time, which we're delighted with. If you could move to the next slide. In terms of the key highlights for 2021, you can see that we raised the amount we were targeting to raise, which was 8 million. That was down on the prior year, and the primary reason for that was in the next row. You can see we had very strong exits during 2021. In particular, the care homes, which accounted for 19% of net asset value at the start of the year, were disposed in the year. And we had a number of successful tech exits, including Antonova, Perpetuum, and OnPrompt. Our investment rate ticked up. We invested in 5 new companies, and that's in line with our target of 5 to 6 new investments per annum. And we also invested to support the growth in our portfolio companies. And we would expect, as those companies, we invest at an early stage, and we expect them to grow and scale and raise further funding. And so we expect that amount of following funding to continue to rise with success. And then you can see the dividends, the key change there being there was a special dividend paid in October 2021, following the amount of proceeds from the exits. Next slide, please. The key changes in value for the year, the 3 largest movements are highlighted at the top, and you can see 2 of those were driven by external fundraisings, and I'll touch on the fundraising round in context later. And then Antonova was driven by a sale in the year, which again I'll discuss a little bit further later. The rest of the movements are broad across the portfolio. So we've got 21 companies rising in value and roughly 21 reducing in value. But overall, the reason for that net increase is that growth within the portfolio of over 60% in the year to December 2021. If we move to the next slide, please. The sector breakdown, you can see the position at the start of the year in brackets, so that would be December 20. And you can see how that's changed over the year. So the big changes, as I mentioned, care homes were sold in the year, so it moved from 19% of the portfolio to 0%. We've had a corresponding increase in cash. So cash has moved from 15% at December 20 to 34% at December 2021. But the key focus areas for our investment being software and healthcare, as you can see, continue to expand as we invest in those sectors. Next slide, please. To give shareholders a flavour of the stage at which we're investing, and therefore, to some extent, the level of risk in the portfolio, we analyse the portfolio both in terms of revenue and number of employees, so the amount of the scale from that perspective. And what is very interesting to observe from this is that the early stage portfolio, which is often where we start our investments, now accounts for approximately 11%. And then in the scale-up stage, where revenue is over 5 million, that now accounts for 65% of value in the company. And similarly, you can see, the number of companies with under 20 employees in our portfolio is only 3%, and 35% of companies now employ more than 100. So that you can see the companies, get a sense of the scale of companies in our portfolio. Can you move to the next slide, please? As VC is higher risk, and as we would expect, some companies will expand faster, and indeed we'd be concerned if they didn't. And we've got these are the 3 companies that are the largest in the portfolio now, and they account for 25% of the net asset value as at December 2021. So there is an element of concentration risk, but that's a function of venture investing. But there's also an opportunity, because once a company has got to this level of book value, so if you look, for example, at Contexa, 17 million of book value, when that company starts to double in value, you can see the impact on the overall portfolio. And so for those, a brief overview of those 3 companies, for those who aren't familiar with them. Provica we backed at a very early stage when it was very low revenue. And we backed some time ago and have helped them scale. They repurpose pharmaceutical formulations for children. So they're not taking the drug development risk. They are repackaging reformulating drugs for pediatric use, and have grown very successfully. In the latest year, we published there, it's 25%. There's not much point showing the lifetime growth because it was virtually zero when we invested. Quantexa is providing data analytics and software to help large banks and indeed expanding into other sectors, fight financial crime, and analyze their consumer data. And that company has scaled dramatically since we invested in 2017. So in 5 years, it's grown its revenue 30x, and its employees from 30 to nearly 500. And they have just raised a approximately $150 million round led by Warburg Pincus to continue scaling. Egress is a cybersecurity business, so it's providing encryption in various environments for enterprises. And again, since we backed them in 2014, revenue has grown 17 times, and as you can see, the size of the company in terms of employees have scaled from 23 to 312. All super exciting businesses, growing very quickly, a range of 25 to 60, 70% per annum. And we're very excited to have them in the portfolio. Next slide, please. We made 5 new investments during 2021. And just to run through at a high level what those companies do, what they're trying to achieve, what their vision is. So on the left, Solidatus is providing data lineage software. So this is primarily for banks and large financial institutions, and enabling them to meet their compliance and data requirements, but also enabling them to do more with data to get value from their data. Gravity is an API management platform business. APIs are essentially the connectors of the internet. They are the infrastructure on which the internet runs, where the software connects with each other. And Gravity has built a super exciting management platform that we believe will be the future market leader, displacing the legacy incumbents. Super excited to back that team. Nuvoair is in the digital health space. They use a spirometer combined with software to help people with their respiratory conditions. Bright Light is a business that is enabling faster data analytics applied to larger data sets. So most of their initial use cases are in the telecom sector, where they're dealing with huge numbers of huge amounts of data. And they've built a GPU database with clever software enabling that to happen. And then Axelex is a data extraction and analytics business for private capital markets. And private markets have expanded dramatically over the last 5-10 years into the trillions of dollars. And a lot of the data on private companies is buried in PDF reports, etc. This enables the automatic extraction of data from any format, and then provides analytics on top of that. An essential tool in helping people analyze private capital market performance. If you move to the next slide, please. So I've given a brief overview of Gravity, but just to give a sense of how much we invested and the shape of the round. So across the Albion VCTs, we invested £4 million of part of a £9 million Series A, and that funding was for US expansion and product development. I'm delighted to say, since we invested only last year, they've raised a further $20 million round, backed by new investor Riverside Acceleration Capital, and supported again by Albion and our co-investors Ox, to enable faster scaling. So super exciting progress. You go to the next slide, please. Nuvoair I touched on. This is part of the digital health strategy. We believe there's been a fundamental shift during COVID towards digital health and the provision of digital health, and that services like Nuvoair enabling provision of of help to patients in with respiratory conditions at home is the way forward. So if you go on to the next slide, please. And we supported our investments we had made in previous years, so follow-on investments, and a flavour of some of those. Aviva is helping people fight diabetes, so another digital health business, and a combination of software plus online access to clinicians, and it is scaling very quickly. Umotif is a platform helping measure patients' health, again in the digital health space, and Black Swan is providing data analytics into the CPG space, so for very large FMCG clients like Pepsi and Procter & Gamble, etc. So for example, Black Swan will help them predict consumer trends, what flavour of crisp will be popular in 6 months' time, for example. We go to the next slide. The major change in the portfolio in the year was the sale of the care homes, which, as I mentioned, was 19% of net asset value. As you can see, there were 3 freehold care homes. They were all startups, all built from scratch. So we funded the development. We backed the management team to build them from 0 patients up to maturity. And we didn't take on outside bank debt. And so that cash on cash multiple is the return on the total investment. So we provided the equivalent of all the equity, all the debt to achieve those building of 3 very successful, highly performing new care homes. I'm really proud of what the team have done in the provision of care in that space. And K received £15 million approximately from that sale, which was part of the reason for the special dividend last year. If you go to the next slide, please. Antonova was a company that had been in the portfolio for some time. They'd previously sold some of their IP to one of the large tech giants, who I'm not allowed to name. And then in last year, they sold the remainder of their business to a subsidiary of Discovery Group, and delivering 3 times, just over 3 times cash multiple. And K received 5.3 million from that sale. Next slide. OnPrompt was a business that it was dealing with RPA, so robotic process automation, the automation of, in this case, it was order to cash, so various automating the process of companies with supply chains. And the exit we sold to Elemica, a US-based company, and delivered a return of 2.3x, which in turn delivered 3.2 million back to K. If we move on to the next slide, please. So our investment strategy hasn't changed, is as it was. We're backing technology businesses with a focus on B2B and in software and healthcare, and we're backing them at seed stage. Often our first investment is at seed stage or possibly Series A, and then we're backing them through to Series B and beyond. We're backing long-term trends and structural trends. We believe that software, the digitization across the enterprise and provision of digital healthcare will see very strong long-term growth, notwithstanding the economic downturn that's likely to happen next year. Next slide. Thank you. ESG is incredibly important part of what we do, and it is integrated at all stages of our investment. We've had a long-term belief that doing the right thing and investing in sustainable businesses and companies with strong societal impact is in the best interests of our investors and will deliver the best long-term returns. So it's always been a part of our culture and our investment process. If you move on to the next slide. As I mentioned, it's embedded in all of our process. So it's from the moment when we first screen companies that we meet for potential investment, and companies that are in sectors that we do not think have strong ESG credentials, we will strike out. It's embedded in our due diligence process, it's part of our due diligence that we do on a company before we invest. It's reviewed and discussed at our investment committee, and we work with companies to evolve their ESG position, our portfolio companies. We monitor it. Once a company is part of our portfolio, we are collecting data, and we're encouraging companies to go further and faster. And we reassess at an investment committee level, we reassess the ESG risks and what more can be done whenever we look at new investments and follow-ons. And then again, when we get to exit and the end of the journey with a portfolio company, or at least for us, we support the company working with acquirers and trying to ensure that we sell into good homes and that good ESG practices remain continuing important and enduring. Go on to the next slide, please. We're working within Albion in a number of areas. We're working on our carbon footprint. We're monitoring it. We're working with consultants in all these areas, and we're aiming to get to net zero. We're designing that strategy and implementing it using biochar carbon removal, and we support local environment action. We are working on diversity and inclusion. We have offered an internship through Future VC. We're working with Fair HQ, a consultant, to establish and improve our practices, and we've invested in the Women Code signatory and reporting. We have updated, from a governance perspective, we have updated our investment process, and we are providing regular ESG updates to the VCT boards, and we're actively promoting ESG within the industry. And in fact, my colleague Katja is doing a fantastic job in that area. If we move on to the next slide. There is a lot of uncertainty as we move ahead. We know the economy is going to be tough next year. We are taking a cautious view in that respect, but we also see there are opportunities. For example, Microsoft, not that I'm promising that we'll find the next Microsoft, but they were founded in 1975 in the middle of a deep US recession. There are opportunities in downturn, and our portfolio is well balanced by sector and stage, and we're investing in mission critical products and sectors where we see long-term structural growth trends. We retain, for many years, we've got limited exposure to consumer facing and consumer spend. Our focus is B2B rather than B2C, and we're really excited by the pipeline of new investments and the further investments, follow-on investments within our portfolio. Next slide, please. So an RNS has hit the wire this morning, which reports, you can see a 3.1% uplift in NAV for the quarter. So very pleased to announce that. We've had further strong exits in Q1 of a further 7.9 million to K. And as a result, the board are delighted to announce a special dividend. So you will see more details in the RNS. We are continuing with virtual AGMs. As you can see, we're finding the level of engagement from shareholders is really encouraging. We're getting 200 to 300 views during and post the AGMs. We plan to retain and go ahead with the annual shareholder seminar this year, which will be in person. And you can see the seminar details on the right-hand side there at the Royal College of Surgeons. So hopefully, I, plus all my colleagues, plus the board, look forward to meeting many of you there. And as a very last bullet point, final dividend, 0.58p, will be paid on the 29th of April. Thank you.
Thank you, Robert, for that very comprehensive presentation. And we at the board as well are very excited about the prospects for what's going on. Despite all the gloom in the economy, we're excited by what we have in our portfolio. So without further ado, I will take questions that have been received via the Lumi platform. And the first one is actually one after my own heart. And it is, why can't the K AGM be combined as a hybrid meeting with attendees and online? As some of you are shareholders in multiple Albion VCTs, I'm sure you'll know that one recently has had a hybrid, and the rest of us are trying out this what we think is a very comprehensive online package, virtual package. As Robert's already alluded to in his presentation, we do get a fantastic engagement of shareholders online that we wouldn't have in the room. That said, there's absolutely nothing to prevent us having a hybrid meeting or a physical meeting. And I'll be very interested to hear from anybody on the kchair@albion email address with your own thoughts on that. But as a board and with Albion, we do agonise over it as to what is the best for all of our shareholders to really engage with us. And as Robert also mentioned, we do have a big shareholder event, which we really hope as many shareholders will attend as possible in November. And that'll be a great chance to interact with the board and with the manager and really hear it from the bottom up. We've already got 150 people registered, and it would be great if we get a lot more. The second question is talking about our top 10 company investments, which are showing a 12 million uplift in value, and the incentive fee that we pay to our manager. The question is regarding company valuations based on earnings multiples, and a specific question about Quantexa. And so I'd like Will Fraser-Allen, if possible, to answer that particular question.
Great, thank you, Fiona, and thank you, Michael, for your question. If I really sort of look at the core of your question, is one makes an observation that we've had a very strong return in the year, and then the sort of second bit of that is just asking how and why accounts are able to be signed off. And you have two specific sub questions there. The first is that you correctly observe that the company valuations and the valuations for our underlying portfolio companies are largely, very largely based on earnings multiples. So that is it's actually typically based on revenue multiples rather than earnings multiples. And that is because there are no earnings, because they're not profitable. So why is that? That's a reflection of the type of investing that we're doing now. We are investing in very high growth businesses. The reason they take money from your company, this company, is because we are funding those losses to supercharge the growth of those companies. So these are businesses with big ambition, doing exciting things that create value over time. In terms of how those type of companies are valued, in the absence of profits, they are valued on revenues. In turn, those valuations are scrutinized. They're produced initially by us as manager, with internal review through valuations committee, further scrutinized by the board, and most importantly, they're then subject to external audit. And we are unusual at Albion because we run a stable of 6 VCTs, all with different year ends. In 3 of the 4 quarters, the very vast majority of valuations in this portfolio are subject to that external third-party audit review. So in summary, there's a very robust process to establish those valuations. It is based on revenue multiples, and that is consistent with the type of companies that we're looking to invest. Your second question was about Quantexa, which is obviously a significant business within our portfolio, which at the point at which the King's Arms Yard accounts were signed off had not yet filed its accounts with Companies House. This in itself gives no reason for the board not to be able to sign off, but it clearly gave rise to a question as to why that was. You will recall that this was in March, April 2021. We were all back in lockdown. And whilst I don't have the specifics here, it wouldn't surprise me if the reason for that delay may have been COVID linked. The important point was they were subsequently filed on the 5th of April 2021. They're in the public domain, and we would have been privy to the financial performance of the company by virtue of the fact that we have a member of the team sitting as a board director, and by March you were already would already have had a view of the first quarter of the following year. So all in all, the board, we were able to provide to the board and us with the auditors both valuations in line with valuation guidelines and comfort around a slight delay in filing accounts.
Great, thanks Will for that comprehensive answer. We've got a great question here from Richard Greenwood. Are you showboating with your growth claims? Is growth not high year on year only because of hasty write-downs in April 2020 following the outbreak of COVID-19? Well, I hate to think that we were too hasty, but we certainly did make those write-downs in April 2020, you're correct. And I'd perhaps like to pass that one over to Robert to talk about our actual growth claims.
So the number I referred to, the roughly 60% growth in the year to December 2021, if I don't have the number to hand for what it was in December 20, but I believe it's around the same number. So that's the annual underlying revenue growth of the portfolio companies. So it is, we're not comparing revenue at these companies, you know, cybersecurity companies, etc., all that sort of stuff did not fall off during COVID. Mm-hmm. In fact, revenue grew from 2019 onwards, you know, quite significantly across the portfolio. So while I don't have it to hand, I think the equivalent number for a year before would be the same or better.
Okay, thanks, Robert. The next question from Dr. Jeremy Robinson is another great question. It's widely reported that around 40% of IT staff are looking for new opportunities and to change jobs post-COVID. Is this an opportunity or a risk for King's Arms Yard investee companies, most of which are digitally orientated now? I think that's probably one for Will, is that?
It's an interesting one. There's clearly in almost every industry you look at, there is pressure on the availability on supply of labour, and I think a very similar sort of statistic could be applied. But you're absolutely right that within IT, particularly in developers, it has been very, very high. The reality is the companies have got to create an environment to encourage those to join. And I think actually when we look across the portfolio and look across their abilities to deploy our funds, often to recruit such people, we've seen good success in the year, notwithstanding the observation that it has taken longer. My own personal view is there's going to be further opportunity, as there will be. I think there will be a number of IT companies that's already being reported who will be looking to downsize some of their technical teams, and that will become an opportunity for the companies to recruit great staff. But your overall observation is right, it's a very tight market.
Great, thanks for that, Will. Now, there are no more formal questions on the Lumi platform. As I mentioned earlier, always very happy for anybody to write into our email address. We do get questions on there. or just write in by hand, and we're very happy to answer them. And any answers to questions, as I mentioned earlier, will be posted on the Albion website later on. So with that part of the business meeting finished, questions and answers, we'll now continue with the formal business of the AGM. The full text of each of the resolutions was set out in the notice of meeting, and the board is recommending all members to vote in favour of all the resolutions. I will briefly summarise the resolutions for you. The first resolution is to receive and adopt the company's accounts for the year ended 31 December 2021, together with the strategic report and the report of the directors and the auditor. The second resolution is to approve the directors' remuneration report for the year ended 31 December 2021. The third resolution is my own re-election as a director of the company. The fourth resolution is the re-election of Thomas Chambers as a director of the company. The fifth resolution is the election of John Chiplin as a director of the company. And the sixth resolution is the election of Swarupa Pataki as a director of the company. The seventh resolution is the reappointment of BDO LLP as auditor of the company to hold office from the conclusion of this meeting to the conclusion of the next meeting at which the accounts are to be laid. The eighth resolution is to authorise the directors to agree the auditor's remuneration. And the ninth resolution is to consider us to allow as directors to allot shares. The 10th resolution is the penultimate resolution, which is in fact a special resolution. And this will give the directors the power to disapply preemption rights. And the final resolution, number 11, which again is a special resolution, is to authorise the company to make one or more market purchases of ordinary shares in the capital of the company. The results of the voting above, including the proxy votes on each of the resolutions, will be announced after the meeting through a regulatory information service and published on the Albion Capital's website as soon as reasonably practicable. I can confirm that the poll for voting has now concluded, and so I now declare the poll formally closed. In the meantime, I will show on the screen the current proxy votes that have been received by the registrar. As you will note, the proxy votes are comfortably in favour of all the proposed resolutions. That concludes the formal business of the AGM, and I would like to thank all the members who joined this webcast for the AGM. As I mentioned earlier, the board does indeed welcome any feedback you may have, and please do send an email to kchair@albion.capital, and specifically regarding the arrangements for the AGM and how it was for you. For those of you who are interested in seeing the list of questions and their corresponding answers, these should be available shortly alongside with a recording of the AGM on the Albion Capital website. There being no further formal business, I declare the meeting closed, and I wish you all a healthy and happy summer. Thank you very much.